It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
I think the domain statistic that Nicola mentioned was a 0.5% vacancy rate in Perth. I don't actually believe it's still that low. Each of these different companies have different methodologies. I know that the REWA or the REI-WA statistic is a bit higher than that. And what we're seeing on the ground is that whilst it is still a pretty tight rental market, it's not that same sort of FOMO level of demand, and we don't have that same level of upward pressure on prices. And my prediction that I made previously was probably more to do with hitting an affordability ceiling at some point. So that's what I think we're seeing at the moment. I don't see the same thing on the sales value side, but certainly on the rental side, I think we're at or close to a peak there.
Yeah, Nicola Powell also highlighted the potential impact of the first home buyers scheme on prices across the country. Really interested in how you see all of this playing out in the Perth property market as a new wave of buyers, of course, are going to enter the market.
Yeah, look, Perth could be, as it has been over the last few years, more heavily impacted by this, because one of the stats that I wrote an article a few weeks ago talking about this, where the long-term average for first home buyer lending is actually quite very, very much below where it's been over the last 10 years in Perth. Other cities are not the same. And what it suggests to me is that you've got this backlog of buyers that have just been waiting for this scheme to start. And so we're starting to see the impact of that on the ground. It won't reflect in statistics for a while, obviously, with the lag. We are basically injecting a flood of new buyers into a market that already has way too many buyers and historically low stock levels still. And so this is going to put upward pressure on prices. It is going to make things very, very competitive again. It's already starting to feel like the peak of the FOMO times from a year plus ago in Perth. And so it's making it very difficult to find and secure good assets in Perth at the moment. I guess the upside, though, is whilst there will be more upward pressure on pricing, Perth is still one of the most affordable capital cities, much more affordable than Sydney. Obviously, I think the average wage that you need to earn there to buy the average property is nearly $300,000. In Perth, it's still down around $174,000. And Perth also has some of the highest incomes and the best wage growth in the country. So an affordability ceiling on the sales value side is not something that I can see us hitting anytime soon.
Yes, and if you have a look at those new price caps right across the country, and Perth in particular, that has gone up to $850,000. I mean, it's a big save time. You know, where you were saving for 20%, it was taking you 6 years. Now, with the 5% deposit, 1 year, 7 months, you're saving 4.5 years. I mean, that is massive. That is on a dual disposable income of $127,000. So, yes, they will be out and they will be buying.
Yeah, absolutely. We're creating buyers from thin air, essentially. These are buyers that previously couldn't afford to buy in a market where, as I said, there's already way too many buyers. So it is going to make things very difficult again over here for either first home buyers, also investors who are still relatively active in the Perth market. And it's going to keep that upward pressure on pricing, I think, for probably at least a couple of years here.
Yeah, so 4 years in, but you haven't sort of just gone in as a sales person working for a company. You decided to, launch your own company, real estate company.
Yeah, so I was with one company on the peninsula for 6 months and then moved to the agent's agency within another business. For a couple of years, we decided to come back to Q East and where we grew up and Darwin. And I thought, why not launch my own business? I want to do it my way.
So you were telling me that you were a flight attendant and operating for Emirates. So tell us a little bit about living in Dubai all those years ago. And I don't know if you've been back recently, but the transformation of Dubai has been quite spectacular.
Back in 2002, the minimum age to join Emirates was 22. I applied within a month, moved to Dubai. My father lives in Poland and actually had his own real estate business, so he's quite chuffed that I've finally taken the same path. I was really always having travelled back and forth from Poland, the emotion of seeing people at the airport or on a plane. I love the excitement of it. I was there for only 2 years, around 23 years ago, to work amongst all these different cultures, credible people that I lived with, worked with, all different nationalities from all walks of life. And that really is what set the path for me in terms of knowing that I love to work with people. You've got to be patient if you're stuck in a can with hundreds of people at all sorts of hours. So, yeah, you have to be patient and passionate, and that definitely helps in real estate.
Do you understand why the allure to Dubai is there for Australians to move and live there?
Absolutely. I think being tax-free, it's new, so much there on offer. People have really built big family lives there. I've got girlfriends that still live there for over 20 years that are from Brisbane or Sicily. They're bringing up their children there, so I can see the appeal. I think for me personally, coming from Poland, I didn't want to be long, to be honest. So I gave it a couple of years, then came back and flew for Virgin Australia for 3 years, and then got into the corporate world.
Yeah, see, that's all very, very transferable. Just in terms of Emirates, it was last year we were talking to another flight attendant, and she lives in Dubai. I forget what nationality she is. She was saying just from a safety point of view, Dubai offers safety like no other city in the world. If she can't sleep, she can go for a run at 3 o'clock in the morning outside. The safety, that Dubai offers is pretty much unprecedented, I think.
It is, and it's safe and it's warm, so you can definitely go running at 3 a.m. I found that Emirates crew are really, really well looked after. They really treat you like family. You're quite protected. Within reason, you have to abide by rules and respect culture.
Good morning, Craig. How you doing? Yeah, I have to admit we were in this space too. I think it took us 4 auctions before we finally bought our first house in Sydney about 4 years ago, but we went to 3 auctions. Went into 3 auctions, I'd say completely unprepared in terms of realistically understanding how much budget we needed to have or how much stretch our budget, until finally the budget and the auction price kind of coincided and allowed us to finally nab that actual purchase. But yeah, it's definitely not first time lucky for most people going to auctions.
Did you have a really big voice when you were doing the bidding, and were you rampant in terms of just increasing it super, super fast?
No, you know what? So it was a new house we were bidding for in Newtown. It came down to 2 bidders, us and another family, both first-time buyers bidding. And actually, we won the auction, but it was passed in. So they refused to sell at that price point, even though it was well above the asking price. This is the way the real estate agents kind of get us by giving a false asking price that's actually way above what the seller expects. So we had to go into negotiations, and we ended up agreeing to pay, a few thousand more than the peak of the auction price. And I was a bit concerned after we did that we'd overpaid, but the house is worth a fair chunk more now than it was in retrospect.
Yeah, that's the thing. If you find a property that you absolutely love and it is long term, how many people make the mistake of, for a few $1,000s, they just say, no, we can't go there on that price point, which is crazy. If you pay an extra 10 grand, what does it matter? If it's long term, you'll soon get that back. Now, talking of money is on everybody's thoughts at the moment. And we've got 3 out of the 4 big banks saying that, well, they're probably not going to cut the rate until next year.
Yeah, this is true. ANZ is the most recent one to join that group. So even just a month ago, from our panel of economists in our REA survey, we were looking at a potential cut in November. That's what most people were pointing to. That seems to have shifted, with most of the big 4 banks now saying we're not going to get a cut until 2026. So we could be looking at static interest rates for the rest of the year. Interestingly, even though that's the case, Westpac have actually made the move, and even though they're predicting no cash rate cut, have dropped 10 basis points off their online home loan, bringing it down to 5.24%. So it'll be interesting to see if the other lenders follow. So basically, if they give everybody who's getting a new home loan a portion of a cash rate cut, even if the RBA themselves aren't going to do it. But this kind of stagnant market, I think this cut shows that there's an increasing level of competitiveness between the lenders to try and grab that kind of borrower attention, because there's not a lot happening with interest rates. So we're seeing that Westpac cut. We're also seeing more incentives being offered on top of home loans, as well as just the interest rate.
And we want to touch on the potential house price forecast. This is into 2026, Graham.
It is indeed, Craig. We have the combined forecast from Westpac and ANZ at the moment. For 2026, It's interesting. We're seeing pretty house price forecasts that are larger than in 2025. So for Sydney, for example, we're seeing about 5% across the two banks, whereas they're kind of saying 7% for 2026. For Melbourne, we're seeing it go from 4 to quite a large 7% as well. So nearly double the forecast in Melbourne next year compared to this year. Also up in Perth and in Adelaide, not so much in Hobart and Brisbane for some reason, but generally pretty positive house price predictions from the big two banks for next year.
We are your local source for unbiased, expert insights into the world of real estate. We are not a real estate company. Our only objective is to help you better understand the real estate market.
There certainly is. We've got the home guarantee scheme, which was going to come in at the start of next year, but they brought it forward to October of this year. And by all reports, it's only been available for 14 days. It is driving a huge amount of demand for first home buyers. And we've seen this play out before. When you provide a lot of incentives for first home buyers, you do pull forward that demand. And that seems to be what's happening right now. But the side effect of that is it also tends to push prices quite a bit higher as well. And if you've got a property under those price caps for the home guarantee scheme, it's likely that you're going to see quite strong demand for that property. And you're probably going to sell it at a better price than you would have just a couple of months ago.
And yes, let's talk about the new housing supply, because you've got some thoughts with regard to that.
I definitely do. If we have a look at new housing supply, the federal government has this target of 1.2 million new homes over the next 5 years. Well, it's over the next 4 years now. And we're struggling to hit the level of housing construction that we need. What we're seeing, though, is as interest rates come down, as that gap between existing home prices and new home prices narrows, we're starting to see more building approvals and starting to see more dwelling commencements coming through the system. But, 1.2 million new homes over 5 years, that's 240,000 new dwellings every year for 5 years. That's a level of construction we've never been able to achieve here in Australia. So we're going to have that deficit. It's extremely unlikely that we're going to go anywhere close to delivering that volume of new housing. But I would say the good news is that projects are becoming more viable. Things like the home guarantee scheme create more demand for housing. Individual states are starting to do a lot more to try and facilitate more new housing delivery. So we should start to see housing construction pick up from here. But in terms of the likelihood of reaching that target, it's very slim.
You've got the mortgage brokers that are saying, on one hand, this is fantastic. It means you can get into the market so much more quicker. You're saving years to get in. However, on the other side, you've got this rather large mortgage to contend with. Is there nervousness from these first home buyers with regard to that, or do you think that they're just sort of looking at getting into the market?
If it's a first home buyer, they are nervous and excited, and also they are thinking of how would they pay that mortgage. It has opened up more opportunities for them in terms of the other suburbs. So say, for example, was recently selling a property in Mango Hill. So if Mango Hill is not affordable for you anymore, because just 2 months ago, the similar type of properties was selling for about, say, for example, $680,000, and it's a townhouse, and now it's selling for $780,000. And it's the same, there's nothing different. And it's just in a few months' time that has just gone up to almost about 100K.
And Varsha, why don't we step over which parts of Brisbane do you think right now is showing the strongest growth and stability?
Again, it's the same sort of suburbs that have been performing really well in Brisbane, which is Camp Hill, New Farm, Weevil Heights. But I am seeing amazing growth in Mango Hill, and the next door suburbs are also sort of coming into place as well. People who can't afford to buy now in Mango Hill can buy in other areas in the next door suburbs as well. So that's again opening up those opportunities for them. When it comes to Gold Coast, it's Burleigh Head, Southport, and Mermaid Beach. Those suburbs have been performing really, really well. And also when it comes to Sunny Coast, it's Bly and Maroochydore. Bly is very attractive for people who are wanting a bit of more space. So especially with interstate, it has been very popular suburb. So people moving from Sydney are looking in Bly. And Maroochydore is very popular for people in their 20s and 30s, because for them, it's not the space, it's about the convenience. So they can just walk to the beach, they can go to the cafe, stays there. It's just more like a city sort of Maroochydore. It has got access to everything. So it drives people that are looking for convenience. Whereas Bly Bly drives people that are looking for family and wanting that bit of extra space for their kids and their pets.
Grab your weekly dose of inspiration to help build a real estate portfolio. We talk to the best in the business every day. Learn from the professionals and know your property with us.
Things are going to turn around early next year. We're going to start seeing some relief for average households in terms of their ability to continue with their lifestyle and the affordability side of things. So all eyes on 26, and we'll just see what happens.
Yeah, very interesting that young professionals are leaving New Zealand, which is stripping away housing demand at the moment. Seems to be one-way traffic. Not too many Aussies going to New Zealand at the moment.
Yes, and that is going to result in property investors in New Zealand having to recalibrate their expectation of the market. You're seeing a lot of disappointing balance sheets for these rental properties, and that could very well explain why investors are increasingly looking across the ditch to Australia to look at how they're going to use the Aussie market to make the math still math.
We connect you to the best real estate information across Australia. The Real Estate Podcast.